What's going on? This is Big Money Forex coming in today with a price action tutorial on market structure, something that I get a lot of questions about, both on Instagram, on Twitter, even on YouTube. I get a lot of messages from people that struggle with understanding market structure and trying to apply it in their price action trading. Just a little bit of a background on myself, as this is the first tutorial. I am what I would call an institutional price action trader. I trade based on what the banks are doing and the hints and little breadcrumbs that they leave for us to trade where they trade and not where all the retail traders trade. But regardless of your trading style, market structure is very important. Understanding how market structure works is very important, and being able to effortlessly and quickly analyze and mark out market structure is a very helpful tool when you're getting going or even when you're trying to perfect your trading approach. So let's get started. So overall, there are three types of market trends. We have an uptrend, top left, we have a downtrend, top right, and then we have consolidation or sideways movement, which is in the center there. Each of these is defined by either higher lows and higher highs, or lower highs and lower lows, or in the case of a consolidation, a break or no establishment of real structure. In an uptrend, one of the currencies is appreciating in value, and in a downtrend, one of the currencies is depreciating in value. In consolidation, there's no real change in the inherent value of the currency, and the market is simply just trying to figure out what it wants to do next. I mentioned higher lows and higher highs, lower highs and lower lows. Follow my cursor. In an uptrend, we have something called higher lows and higher highs. An important rule for you is that a higher low must create a higher high to be a valid level of structure. What I mean by that is you can see that at each of these lows create new highs, a new low that creates a new high, and this one is above the last, right? Follow the lines. We have a higher high, higher low. We break the previous higher high, higher low to higher high. Break the previous higher high, higher low to higher high. You can see that each of these floors, as we like to call them, are slightly higher than the last. So the structure is building or maintaining pressure to the upside. The opposite would be true in a downtrend. We have lower highs that create lower lows. They honor the previous lower high and they surpass the previous lower low. Follow the cursor. We have a lower high that creates a new lower low. We have a new lower high that creates a new lower low. Lower high, lower low, so on and so forth, until one of these structures is broken. Once price action breaks one of these key levels, we're starting to get a change in the trend or the market condition. And that's when you can start to say, okay, it's likely that the direction of the market on the time frame that you're looking at and looking at the structure on is likely to change, because the pattern of buyers being dominant or sellers being dominant is potentially shifting. In a consolidation, there's no real change. Price just sits between supply and demand, and there's no inherent trend available for us to analyze or utilize. You can trade a trending market, you can trade a ranging market. It's all based on your understanding and confidence and skill set. I would say for new and developing traders, stick to trending markets. They're simply easier because there's a pattern of behavior that has been established, as opposed to consolidating markets where, as you can see in this little drawing that I made, sometimes it may not make it all the way to the top of the range or to the bottom of the range, but it will stay range bound until it breaks maybe one of the previous lower highs or creates a new lower low, or something changes. It expands past the current supply and demand. So what do you do when you're in consolidation and you don't have a clear trend? Ultimately, the underlying trend, let's just say, for example, the market had been moving down. We have lower high to lower low here. This downside structure that preceded the consolidation is still your dominant overall trend until your lower high is broken. If the lower high breaks, the consolidation could be creating a change in your trend structure, and this may become invalid. You're probably asking yourself, well, this is like super simple. How do I apply this to my charts? One thing that we should talk about before we get into that is that the rules of structure apply on every time frame. We like to say that these rules are fractal, meaning that they apply to everything from the yearly chart to the monthly chart to the weekly chart, daily, H4, H1, so on and so forth. The higher time frames show you a clearer overall trend of appreciation or depreciation. As you get into lower time frames, the rules of structure still apply, but they hold less weight in our analysis and decision-making process. So what time frames would I possibly mark out my structure on? I like to mark out my trend structure on my weekly, my daily, my H4, and my H1 at maximum. Now, each of those have a different purpose, right? Our overall trend, we can look at the weekly and the daily. That helps us get an idea of what may be happening in the very long term, or maybe within a week. When we start to look at the structure on, say, our daily and our H4 and consider those two and their relationship to maybe the weekly or the monthly, we can start to see the details of how the week or how the day is progressing. As we get into the H4 and the H1, we're definitely looking at just how the day is going. And we always want to ask ourselves, what do our lower time frame structures mean in relation to maybe our next time frame up or our higher overall time frames? For example, if you follow my cursor here, let's say that this black line represented our daily trend structure. Within this, we may get a lot of pivots, a lot of higher lows on, say, our H4, or even more higher lows and higher highs, changes in structure and breaks and retests, etc., on our H1. The lower that you get, the more candlesticks there are because there's more data, more closures of candles, and thus you're going to have a lot more pivots. But what's important is this overall trend structure and how it's building, the ebb and flow of the market, I like to say. Understanding that is the clearest picture of what the market is doing. The lower you get into on time frames, the more data that you get and the more confusing it can be. So you always want to keep in mind what those high time frames are doing. It is massively helpful. Now, this is probably a refresher for some of you. So I apologize, this is boring, but let's get into the good stuff. So to demonstrate this idea of the fractal nature of market structure between multiple time frames, I've drawn two colored lines. The black line in this instance, let's say, is our daily structure. Our blue line is going to be our H4 structure. Now, if we follow the black line, we can see that we have one big push to the upside, to the downside, and then a further push on higher. Within these legs of structure on our daily, our H4 chart is putting in a series of higher lows and higher highs, breaking that structure on the break of this higher low to higher high, changing to a downtrend. Again, breaking structure, creating a new leg to the upside. This visual demonstration works on virtually every time frame. Within this blue line, you would have H1 structure, and within that H1 structure, you would have M30 or M15, M5, etc. And this is why I think it's important to keep a perspective on your highest time frames. You don't want to get confused at the overall motion of the market. Why? Ultimately, getting caught in those small time frames and trying to trade every little tiny pivot can be difficult, and it's sort of a retail trading practice. Now, it's okay to be a retail trader, but the odds are stacked against you. And I think the smartest thing that you can do is try and identify how and where large financial institutions are trading in the market. Banks, right? Ultimately, we're looking for the big money in Forex. So when we think about the rules of structure and we have higher lows and higher highs, follow the blue line and you can see where we get a change in trend structure. We had a break of structure of our higher low to higher high here, a failure to create new highs, and a continuation down. Again, we broke at this point above this level. So you may ask yourself, well, is this one the higher low or is this one the higher low? On the H4 on our blue line, this is our higher low. Now, ultimately, that should probably look just like that. On our daily chart, this is our higher low to higher high. But the level where the structure from down to up changed was on the break right here. And thus that is the level of higher low to higher high until we get a new level of demand created that creates new highs. Then this is our higher low to higher high, higher low to higher high, higher low to higher high, so on and so forth until something changes. Now, in a later tutorial, I'm sure that I will talk about how to target areas where you may get potential pivots, but you won't always know. You won't always be able to predict exactly where large time frame structure may pivot. There are some tips and tricks, and there are practices that I use in my trading every single day to get a pretty accurate idea of where things may happen, but that's for a later video. Right now, we're just talking about structure. So what's important here is higher lows and higher highs in this uptrend, and the idea that our slightly smaller time frames have a lot of pivots within our overall picture, right? Our black line being our daily and our H4 within that. Now, if we were to simply flip the chart here, we have a downtrend and the same rules apply. If our black was our daily downtrend and our blue is our H4, we can see that we have a succession of lower highs and lower lows until that is broken, and then we get a change in our trend structure on that time frame. Price comes back up, it breaks that structure once again, and we start pushing on down, right? The same thing applies. Now, when we don't have this relationship of lower highs, lower lows, or higher lows and higher highs, we're in a consolidating market. And that just means that we're simply not getting any determinate data on where the market may move next. This is very important to understand because you're going to be a lot more successful when you trade pro trend. What I mean by that is you trade with the overall higher time frame trend. So you're asking yourself, okay, what is my overall trend? How do I classify that? That's going to be when you have multiple charts that are saying the same thing. For example, let's say that in this currency pair, our weekly chart had a structure that was bearish or pointing to the downside. It was in a downtrend. Our daily chart was pointing to the downside. It was in a downtrend. And our H4 chart is pointing to the downside and it's in a downtrend. That would be a very pro-trend sell scenarios. You would want to be selling ultimately in that market because most of your higher time frames, ultimately what the banks are doing is pointing down, right? The higher time frames look at the overall condition of the market, and all of the little traders at home, even small hedge funds, really anything besides massive financial institutions, and I mean massive, like perplexingly large amounts of money, all the small people don't make these things happen. They're just swimming along with the big fish, the sharks, ultimately, and the whales, right? So what we want to do is we want to swim along with them and try and not go too much against their motion because it's likely that we would get gobbled up if we did, right? Now, if our H4 breaks structure right here and I start to see a pattern of appreciation to the upside, I can certainly trade that trend because it's on my H4. But let's just say that, for example, our black line was instead our H1 chart and our blue lines were the M15 chart. I would not trade this simple break of structure right here to the upside if my overall picture was to the downside, right? If my H4 was pointing down and my H1 was in a downtrend structure, I wouldn't trade the 15-minute retracement or counter trend structure. I would simply wait for this to change pro trend again and then look for a trade to take because I have a higher probability of success because I'm swimming with those sharks and those whales. I hope that makes sense. Let's move on to looking at a chart and marking out some actual structure. So in this part, I'm going to speed up a little bit. in the Australian dollar versus the US dollar chart, the one that we're going to be looking at, what I want to look at here is simply the lower highs and lower lows of the downtrends, the higher lows and the higher highs of the uptrend on multiple time frames to give you guys a visual example of how I start to mark out structure. So what we can see here is that we had a leg of depreciation. We had a leg of appreciation. We had some depreciation, and we're potentially breaking out of that structure right there to the upside, right? So if we had each of these little legs, what we're going to do here is I'm just going to draw a line. In a downtrend, it would be lower highs. In an uptrend, it would be higher lows. The reason why is in a downtrend, the lower high is what governs the push to the downside. If price breaks above this, then this situation has changed. In an uptrend, the higher lows dictate and maintain the structure, and thus they are most important. So in a downtrend, lower highs, most important. In an uptrend, higher lows, most important. Follow along. So if this was our break to the downside right here, where did it come from? Right here, right? Okay, this is our initial pivot where we got a lower high. Next, we got another little bit of pullback right here. We got a further extension past these lows. The reason why this is our lower high is we had an attempt for buyers to step in. Again, this is the monthly chart. So this is a lot of an attempt, multiple days and even weeks of buyers trying to step in, but overall sellers were still dominant. We broke into new lows here. We got a lower high to lower low. If this is our lower high to lower low, this is the important level that cannot be broken, correct? Correct. So what we're going to do is just draw this line out over here. And if I had a more steady hand, you would see that this definitely did not break this level. Price action honored this level, and then we got a new extension to the downside. So if we looked at this in sort of broad scope terms here, we would see that we have a push down, a push up, a push down, right? What's happening right now? Well, in this push to the downside, we have some attempts where buyers tried to step in, sellers took back over, right? In this push to the downside, this is our lower high to lower low. Now, if this lower high has been broken, we're seeing a change in our market conditions, and we're very likely getting a pullback relative to this overall structure. So what we can do is say, all right, we have some levels on the way down that may be interesting. Once those levels are broken, they're no longer interesting. But we can start to watch and say, well, hey, we're getting a change in our trend conditions, our market environment structure here. So what we want to do now is switch from a selling bias based on this time frame into a potentially buying bias. Now, think about the rules of the high time frames, think about the rules of structure. What would happen if we got a level of demand that exceeded these highs? We would now have a higher low to higher high. And that would make this probably a retracement relative to a yearly chart right here. Now, the reason that we're looking at such a crazy high time frame, and trust me when I say I don't use this all that often, the reason why is it's a lot clearer because there's less candles and there's broad stroke movement and pivots. This is going to be different on every time frame. It's going to be different on every pair. Some pairs are going to move much more erratically. Some pairs are going to move smoothly and slowly. For example, AUDUSD or NZDUSD both move a little bit smoother, a little bit slower. When you start to get into pairs that are a little bit more wild, you'll look at GBPs and Japanese yen. If you want something in the middle, maybe you'll go look at Euro USD. As a rule of thumb, emerging markets or smaller countries against larger countries' currencies can have a lot of price fluctuation and changes. So as you're beginning, find pairs that make sense for you. If you want to just start slow and low, check out AUDUSD, check out NZDUSD. Euro USD is good. And as you start to progress, you can move into other things. These are the three that I'm currently focusing on the most day in and day out. I also trade yen pairs on occasion. But these are a good one for you to start to look at, and I highly suggest it. So we're going to take that off now. Now, if this was our, again, monthly lower high right here, we're going to make this red. We're going to add some text. We're going to say monthly lower high. Now, this is broken at this point, right? So it's not really important. Sometimes what I'll do, just leave it on the chart so I remember what it is on my smaller time frames. I'll go like this, and I want to make sure that I have this at the correct spot. Now, which one is the lower high? It's the highest point of the pivot, right? So this candle wick slightly higher. I look up to the upside up here. I have my open, high, low, and close indicator. You can find that in your settings. My high of this was 70320. So that's what I want to type in coordinates, 70320. Now I am right on the money on all my smaller time frames as well, right? So when I start to go in here and look at, say, our weekly chart, we can see that this is our pivot from the monthly to the downside. And this is where we started to get our break. This is the true level where we push past it. So this ultimately is our weekly now, higher low to higher high. If price can break above this level right here, then we would be getting a new weekly higher low to higher high, right? Again, what we're going to want to do here is just say, okay, put it on the right one. Our low is 67766. That's a mouthful. 67766. I'm going to make this one blue. Do whatever colors you want. I like to use blue for support, red for resistance. I always have. There we go. That's going to be our weekly higher low because we have a break of structure right here. I'll draw a little line in a second. I'm going to make that one solid, and we're going to say weekly higher low to boom. And again, we got our break of structure at this point right there. Boom. So once we broke past that level, we exceeded into a new push to the upside. We changed our monthly market trend structure. This is where our weekly changed. We had a break of structure on our weekly chart right here at the last point where buyers wanted to step in, right? So what if I put something just for demonstration purposes that said weekly lower high right there? And again, we're going to change that because it's broken. I'm just going to make it a dashed line for all intensive purposes and go look at our daily. What happened? This is also our daily lower high. This is where we got a clear confirmation that the market was changing. This was a complex pullback until we broke past this level right here, right? So you could trade this to the upside because we have a pretty clear daily trend structure, right? But as we came into this area, we would want to take some profits potentially in case price failed to exceed and push on up. But it sure did. It pushed way on up there. Gave us a big old candle right there, big old financial institution starting to step in. We got a new set of higher lows to higher highs, higher lows to higher highs, et cetera, et cetera, et cetera. Now, if we follow this along, we can see that we got a set of higher lows into higher highs. This is where we exceeded. This is our true higher low. Has that level been broken yet? No. Price kept on going, kept on going, kept on going. And look what happened when we started to break this. Price broke to the downside. We had an attempt to crack into new lows. It didn't happen. Right, we got a little bit of a break here. Wicks do count. So if we ask ourselves, did anywhere go lower than this? Yes. Where did this come from? Right here. This is our final lower high of our daily pullback against our weekly trend structure. So if this is our last daily lower high, once we broke above this, now we're saying it's time to buy again. This is important to understand. This is where we got our last break of our daily lower high and a push to the upside. So now we're thinking buys. That is our daily pro trend move. Price pushes on up to the upside. Where do we get the next break higher? Right here, daily higher low to daily higher high. Take the average of these wicks and look for, I would say that's probably a good pivot, but let's just say that's our daily lower high, I'm sorry, higher low to higher high. I'm dyslexiaing. Our daily higher low to higher high came from this point. That's where we got the extension into these new highs. And if price can break past this level from our weekly chart, we're now expanding our weekly structure as well, which would point even more bullish for this pair. And we could look for some nice explosions in price to the upside. What happens if price fails to break this right here? Then we start to get into consolidation potentially. If price fails to break that level of supply, but it stays above this level of demand, now price is becoming range bound. If we get a rejection from this level that breaks this higher low to higher high, it's very likely price is going to come back down into one of these levels and retrace or do something relative to a higher time frame. One way that you could monitor if this situation is changing is going into that H4 chart and asking yourself, okay, sorry for these crude lines. Let's actually go into our daily chart and make it a little bit cleaner. Cool. So here you can see that we have the level from the weekly chart that needs to be broken. We have the level of our daily demand where we got that attempt to go lower, but we ultimately changed into this bullish leg of structure here. If price cannot break above this level, then we may be seeing some rejection and price may start to consolidate. So what we want to look at here ultimately is our 4-hour structure as sort of a hint of what's going on, what's happening. Is it holding up? Are we going to get that break to the upside, or might we be getting a rejection? So did we break higher right here? Like I said, wicks do count. This would be your 4-hour higher low to higher high. If price breaks past this level, it's very likely that we're getting rejection from a known level of sellers, and we may get a retracement relative to, say, our daily chart all the way down here. If that H4 structure can continue to the downside long enough to break that level right there, then we're getting a change in our daily trend structure, right? So ultimately, what's super important is going to be this level for our daily, and you'd want to mark that out with a horizontal ray and just say daily higher low right there, right? And then our H4 higher low as well. Remember, in an uptrend, what's important? Higher lows, higher highs. Higher lows more important. In a downtrend, what's more important? Lower highs. They create lower lows, right? So let's just say that this is our H4 higher low right here. Boom. Great. Now we have structure completely marked out. We understand that on our monthly and our weekly, we're looking quite bullish. But in order for price to really expand on that weekly chart or even the monthly chart, we need to break past this level. And then we start to look at the details. What is our daily chart doing as we approach to the retest of this level to possibly break or bounce from it? What do we need to know? We know that on our daily chart, we have a higher low that created a higher high, and this attempts to expand market conditions further on up to the upside. In our 4-hour chart, we can see that we have a higher low here that's giving us that push or the attempt on up to the upside. And if we should break this, we may move back into our daily level. If we break both our H4 and our daily higher low levels, it's very likely that we're going to pull back relative to this weekly push right here. And this starts to illustrate the fractal nature of structure on multiple time frames. And this is ultimately kind of a time frame correlation 101 as well, right? Hopefully you all found value from this if you've made it this far in the video. If so, leave a comment, send me a like, subscribe to my channel, send me some love down below. If you didn't enjoy this and you're still watching, congrats, hats off to you. You've made it this far. Drop me a comment or shoot me a message and let me know what I can do better or cover in the future that would be more help to you. And until next time, trade safe.